It's been a really interesting time for the private equity industry. Global asset sales are down something like 20% in the first half of the year. And this pressure keeps building from LPs. We've heard from the likes of Scott Kleiman on this program saying funds are going to need to capitulate, that investors have lost their way. What finally does break the logjam that this industry is experiencing?
I think interesting is a good word, because there's so many different facets to what's going on that it's really hard to capture it. But for me, this environment is a great reminder that private equity was never meant to be a passive business. It is a very active business. And we had such a time of economic tailwind from, call it, post-GFC up through 21, early 22, that this more passive model almost unintentionally emerged that was pay really high prices for good assets, let them grow, and sell them for more than you bought them for. And look, that's great when it works, but that only works in an environment with a lot of tailwinds. And the environment we're sitting in right now has all kinds of complexity, and it's a great reminder that you really do have to very actively add value, create outcomes, be proactive, drive transactions, and that model can still be effective. But it's different than the way a lot of private equity was working for a long time.
Does that mean that just some funds aren't equipped to adjust, that they were successful because they could live in this passive world, and now that the world has become active, it's hard to get back on track?
Yeah, look, there's been a whole range of strategies out there, and it's hard to use a cookie-cutter definition to define them. But for sure, the buy high, sell higher, I buy great assets, I just pay whatever I need to pay for them model. And a lot of that model accrued to software assets in many cases, not because it was specifically designed for software, but those were good assets that were growing and were trading at very high multiples, and so it was very applicable to that segment of the market. I think that business model has been challenged.
What does your software exposure look like, and what have you been doing with some of those companies?
Tech has been an important part of our business for a long time. I would say in that late teens, early 20s period, we really struggled with the valuations that were being paid for lots of different types of tech assets. We worked hard to try to find the ones where paying high prices was going to feel appropriate and justified. But that, to us, that was a smaller subset of the market. So it's been about 20–25% of our activity, and it's performed well. But it has been different than the industry, where it was closer to half the industry activity for a couple of years there.
And another sector that Bain really excels at, and you yourself have an expertise in, is healthcare. And I was really shocked. I was looking at a report that global healthcare PE activity was at an all-time high in 2025. Some of that might be because there were some big, large deals out there, like Hologic, for example. How do you see 2026 shaping up? Because it does feel a bit more quiet for healthcare private equity at this moment.
Yeah, I think one of the reasons healthcare has been a great space for private equity in general, and certainly for our model, is it is a really complicated sector. So it lends itself to that kind of agile, hands-on, activity-oriented governance, and the ability to really drive inflections in complicated spaces. But that's evolved a lot over the 30 years that I've been in the business. In the early days, it was a lot of healthcare services and the developing models there. A lot of that activity has really shifted to, I would say, really two big pillars of our focus. One is biopharma, where I think we're still in the early innings of an incredibly interesting innovation wave. And the other is healthcare tech, where the healthcare world for a long, long time was well behind many other industries in tech investment. But that's been changing rapidly. And the applicability of tech tools to the complexity of the data and the ability to really change patient outcomes in healthcare is incredible. So I think we've got a long way to run with that as well.
I hear that too, and I just think, isn't that also being disrupted by AI? How big of a force has artificial intelligence been for healthcare IT?
Look, it's still very early, but I'm incredibly bullish on the opportunity for AI to be a terrific tool for healthcare providers, but more importantly for patients and the outcomes they can get. I think one of the questions that we're all grappling with as we think about how much can AI disrupt any given sector is, what is the right to exist for any business? And it does have some proprietary position in the market that lets it at least have the right to go try to be an AI winner versus a business model that's going to be disrupted by AI. I mean, nobody has any guarantees. But when you think about the proprietary private nature of healthcare data, if you have access to that data and then can layer AI tools on top of that to drive better efficiency, better health outcomes, that puts you in a really interesting place to go try to win. You still have to do the work to do it, though.
Right, so it's one of these moats that everyone is searching for, a holy grail of that. Elsewhere in the world of AI, Bain has been one of the founding partners for this Open AI Deploy Co. This partnership you did alongside some of your peers. I know it's still very early days. It's only been a month, but have you gotten your hands on their FDEs, their forward deployment engineers yet? Are they they starting to look around some of your portcos? What's sort of the latest on that?
Yeah, look, it's all of the above. I mean, we're incredibly excited about the opportunity to try to be a winner in helping our companies deploy AI. If you think about AI, obviously it's an important technology. You know, we don't think we have a right to win in being the inventors of frontier technology. That's not what we do. Where we think we do have a right to win, though, is in helping our businesses transform their operations to benefit from these technology tools. And we have 40 years of history helping our businesses grow, transform, and inflect. And that's going to be at least half the battle in deploying technology. So this kind of a partnership, I think, is going to be terrific in terms of being able to, pour gas on the fire of all that inflection. But there's a long ways to go in terms of building out the people and the tools and the capabilities to really drive that at scale.
Can AI be a source of alpha, though, for private equity? Because, the business, as you're saying, you can't just be passive anymore. You need to find ways and tools to improve a business. But does AI give you that ability when so many people can get their hands on AI? It's not necessarily unique, the ability to use open AI models within a portfolio company.
Look, I think I actually agree. The AI tech is unlikely to be a massive differentiator. I mean, I'm sure we'll see lots of leapfrogging in terms of models and tools and a lot of different interesting technologies developing. What we want to do is be the best at helping our companies deploy those tools. And in a lot of ways, that's no different than the way we've built our model for 40 years, which is, people have always had lots of ways to transform and grow and improve businesses. We just try to be a little faster, a little better, a little more agile about it. We want to do the same thing with deployment of AI. It doesn't mean we'll be the only ones who are good at it or great at it, but we think we can be amongst the best.
By the way, do you see a lot of places to trim specifically with jobs in your portcos when you add this on? I mean, there's some in the industry who've been incredibly bullish, saying, we're going to replace a lot of human capital with some of the AI capabilities. Are there lots of places where you just need less people now?
The answer is I don't know yet. I mean, one of my colleagues who really leads some of our thinking in this likes to say it's the difference between re-engineering and reimagining. Re-engineering is taking what you're doing now and figuring out how you can do it a little bit more efficiently. And in those cases, there probably are opportunities to reduce headcount. But reimagining is saying, we've got this incredibly interesting new technology. What if we should be doing business totally differently? And that might mean more people, it might mean less people, but it's going to be completely different. And so we're trying to pause and look at all of that before we just start, shaving efficiency here and there. But I think we're going to see all of those play out.